Today we're going to cover the 2021 real estate market review. First off, I want to thank all our investors and clients that we worked with in 2021. 95% of our business came from repeat and referral clients, and that is the highest compliment that we can receive from you. We also did over $20 million in sales volume last year, which puts us in the top 5% of all realtors in Ontario. I started out just posting content to help my clients at the end of 2020 during the pandemic. Very quickly, our database grew, our audience grew, and I'm very grateful for every single one of you that reached out to us to do business or ask questions about real estate. I will continue to provide value and content around the real estate space in 2022. So if you haven't already, hit that like and subscribe button so you get notified every time a new video is uploaded. Before we jump into the video, I do run a real estate team here in the Greater Toronto area. So if you have any specific questions to your situation, do not hesitate to book a call with me on the link below for a seller consultation, buyer consultation, or simply to chat about real estate. It's obviously been a crazy year in the real estate market with prices reaching through the roof in all of Ontario. We're going to cover Greater Toronto area, and let's start with condos. In Jan 2021, prices for condos started at $600,000 and $100,000. Fast forward December 2021, they're at $715,000. That is a total of 18% increase in 1 year. I think condos are going to see much higher growth in 2022 because they are traded at the lowest price points amongst other asset classes at the moment. More than 70% of all properties under $1 million in the Greater Toronto area were condos. But condos weren't the highest appreciating assets in 2021. In fact, they were the lowest. Guess what were the highest appreciating assets? Townhomes. It makes sense, right? When a person wants to move up from a condo to a freehold property, in most cases, semi-detached and detached homes are unaffordable to them. So what do they resort to? Townhomes, which is why townhomes reflected the highest appreciation in 2021. Townhomes started at $871,000 in Jan 2021, and now they're trading at $1.137 million. That is a 30% growth in 2021. Semi-detached started at $940,000 and now trading at $1.18 million, up 25% in growth. And detached homes trading at $1.24 million, now trading at $1.599 million. Crazy growth in all asset classes, if you ask me. So taking all of these properties into consideration, naturally, the detached home saw the biggest return on investment because you started at a much higher price point and then appreciated even higher. Overall, no matter what type of property you bought, all homes saw a minimum of 20% growth in 2021. Now I'm going to share why we saw such drastic growth in the real estate prices in the last 12 months. I'm going to start with interest rates. Bank of Canada overnight lending rate was trading at a prime rate of 0.25%. That means you can get a variable rate at 1.5% and a fixed rate at under 2%. Money was extremely cheap to borrow, and that's why people had more access to capital. I said this before and I say it again, no matter how many tax implications you put forward, unless you make money harder to borrow, or you ask investors to put more than 20% down on properties, or you increase the supply of real estate drastically than it is now, there's no way we're going to see dip in prices. Next, I'm going to talk about inflation. Our inflation is at a 20-year high. In these situations, if you own any assets, whether it's stocks, bonds, real estate, you will become wealthier. Whether you like it or not, that is just the truth. Now, in times when the real estate prices go up, interest rates tend to go up as well. I predicted in my previous videos that Bank of Canada will announce at least 3 rate hikes in 2022. But with the new variant coming along and the new lockdown implications, I do predict that Bank of Canada may prolong the rate hike, which will result in money remaining cheap to borrow. Next, we're going to talk about the rental rates. Unlike any year before, the rental rates have gone up $200 to $400 in just 1 year in real estate. That is the highest it has gone up in the last 20 years, which is increasing the demand of investment properties even more. At one point, we had about 1,000 rental properties up for rent. Now we have around 2,000 properties up for rent. So the increase in rental properties is a lot higher, and the supply has drastically dropped. Moving on, in 2021, we also had a little thing called the elections. And with the Liberals winning, they did make many announcements in the real estate space, which haven't actually been implemented yet. However, one of the biggest announcements they made is banning blind bidding. Now, this won't necessarily lower the property prices, but it will create more transparency in the market. Personally, if we can avoid people from overpaying on properties, I'm all for it. Liberals also said they will ban foreign buyers from buying properties in Canada. Now, foreign buyers account to 5% of our buyers' market. So I still don't think it's going to affect our market drastically. The Liberals have also said they will be imposing a speculation tax on homeowners that own properties for less than 12 months and sell them. This will not apply to people that have a sudden job change or a personal matter that requires them to move out of the province. So they're really going after house flippers here. Again, a nice idea on the surface, but I don't think it's going to impact the market drastically. Also, the Liberals, from before they even won the elections, have been announcing that they will be bringing in not 200 but 400,000 immigrants into the country over the next 4 years. I'm from India and I love meeting people from different backgrounds in my city. However, with the new tax implications, no foreign buyers, and the high construction costs, and now you bring in more immigrants into the country, let's be honest, you're not addressing the real problem here, which is lack of supply. Now, just to summarize, with interest rates at an all-time low, construction costs at an all-time high, high rental rates, high inflation, foreign tax bans, tax speculations, and with more immigrants into the country, what do you think is going to happen in 2022? You guessed it right. I don't think the market is going to slow down in 2022. In addition to that, I want you to take a Google map view of Ontario in general, and looking at the real estate, you will find that most properties are situated very close to each other. And that is because of the zoning bylaws in Ontario in general. We cannot build around the green belt, which is restricting us from building more supply. I know this video was packed with information and one of the more serious videos I've made. If you like this type of content, please hit the subscribe button. And if you have any specific questions, do not hesitate to reach out. Hope you found this video helpful. Have an amazing 2022. And remember, we provide results that move you.